Is the debt ceiling passed or not? I guess we'll have to wait until 8:30 tonight for that outcome. If there's a good earnings report out there and the stock's trading higher, will you let us know? From what we're seeing, there aren't any. Several reversals in big tech yesterday. Is it a sign of a top or just a buy the dip opportunity? We got a lot to cover here on this Wicked Wednesday. This is pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, let's take a look at the big board. S&P's down 17 and a quarter, 41.9775. Posted a new closing high for the move yesterday, but couldn't hold it during the pre-market session. Dollar, that's up 29 cents. That's not helping things. New high of the move, 104.36. Bonds up 3/4 of a point, 128 and 8/32. Crude, there's some problems there in crude land. Even Warren can't help things out. Down 205, 67.42. Gold and silver in harmony today, up a little bit. Gold up $1.40, 1978 and a half. Silver up 16.6 cents at 23.40. Bitcoin gained a grand yesterday, giving back 845 so far today, 27,225. Let's bring on Triple D. I guess wait a second. Was the stark reversal in the chip stocks yesterday? Did that call for the end of the Triple D? Tick
No,
AI?
but maybe today, because I'm just looking at a stock like AI gaining $10 yesterday, closing at the highs. So I'm going to officially use AI as my gauge. And, yes, NVIDIA did come off the highs. Yes, AVGO. And did you see the move in AVGO? Did you see this?
I did.
It went up another 100 points in the first 10 minutes. And then it gave it all back. The entire thing. So I do think we did get upside capitulation in a lot of these stocks yesterday. So I do think the top is in an AVGO. I do think you're going to see some of these other stocks. NVIDIA didn't close red, but did reverse off the highs. AMD did close red, reversing off the highs. So it did kind of feel like I could have did the haircut. It kind of felt like it, but then you had a few stocks still AI, making new highs. So not completely dead. I mean, today even, you've got a lot of these, Microsoft is green, Google is green. Come on. I mean, this is interesting, that, Amazon's green here too. So, you know what? The story kind of continues here. The story is kind of still the same, even though we've got a few major pullbacks in some of the crazy stocks. And yes, Micron's down significantly, and we've got a few other, major chips down significantly with NVIDIA and AMD again, but it still kind of feels like it may not be totally over, at least for AI. The market, completely other story though. It was been over for a long time. I mean, we're breaking down to new lows on a lot of stocks.
IWM, I mean, that thing
IWM
never sniffed last week's high. But and we can go into more details on some of these stocks, but I like days like yesterday because like now you got a reference point, right?
True.
I mean, you've got to. I mean, now you at least got to be thinking that a temporary high or short-term high has been put in an NVIDIA, right? And there's simple technicals that you can use to, determine that. The first thing for me today, and I'll be watching, I'm going to see how it traded in the after hours and pre-market. Can it get back over 400, 401.11, right? That was a closing high. That was the all-time closing high. Now you're down $7, and people are thinking, "Oh, I should have sold in the 400s yesterday. Why didn't I sell in the 400s?" But Mitch, there's some earnings reports out there, and what I'm seeing down 8%, 20%, 28%. Why don't we talk about the worst auto parts store? I guess we could start there if you wanted, because man, don't tell people there's a bull market if you own AAP.
Yeah, I think we're gonna have to start changing this name. They no longer should be called Advanced Auto Parts. We got to do something with that.
Declining
So
auto parts.
chat, you guys let me know.
Declining
What do you
auto
guys think?
parts.
I'll kick it to you guys out there. Normally, I have one ready for you guys. I wanted to hear what you guys think. What should the new name be for Advanced Auto Parts? Let's talk about their earnings. Q1 EPS here comes in at 72 cents, missing the $2.57
gosh.
estimate. Sales at 3.42 billion, misses the 3.43 billion estimate. So looks like they also trimmed fiscal year 23 revenue outlook. So not looking good here in Advanced Auto Parts. And it just seems like it's really the forgotten one in this space. So I definitely would leave it to the sideline.
There's just, like NVIDIA best of breed. And we've talked about Advanced Auto Parts as worst of breed for a long time because you have the other two, AutoZone, which, if we go back to a month ago, was trying to make new highs. O'Reilly, not far from all-time highs here. I mean, it's down today on the AAP. Both of them are going to be down significantly on the AAP numbers, but holy mackerel, the opposite story has been true for Advanced Auto Parts for a long time, just continues to go down and disappoint. We're now getting down to 2020 lows. We're getting down to 2017 lows. I mean, completely opposite story. And that same time, O'Reilly has went from 200 to 900. AutoZone has went from 500 to 2,500. So you're talking about stocks that are up 400% in the same time period that Advanced Auto Parts has gone nowhere. So definitely worst of breed. I don't know why this stock and company continues to underperform, but it's never a great idea to buy worst of breed.
How about Advanced Auto Part? Because maybe they sell a part a day, trading near the lows of the pre-market.
We need to change
session.
to AIAP.
Yeah,
Yeah,
low at
AM.
$80, and that's just because $80 is a round number. 81.94 was a monthly low back in April of 20. Your COVID low, 71.33. I don't think you're going to see that today. I'm not shorting this in the hole down, $31. It's a steep decline. But if you're trying to pick a bottom here, just remember $80 was the pre-market low, and then if you're looking for more under 80, see if they'll hit your bid at 79. See if you'll hit the bid at 78. If they're not hitting your bids, then you might have to start lifting offers. But man,
or you might have to just not trade the stock.
Okay.
Yeah.
I mean,
that's what
sometimes
I'm
it's
thinking.
just, trying to call a bottom in something like this is when a stock has just been in this vicious downtrend for 2 years and gone nowhere for this many years. Yeah, there's some support at 78, 2020 low, 71. I mean, so you do have some support in here. If you were short, do you bring it in on this? Maybe, but you got retail in trouble. The overall sector has not been doing well at all. And then you've got the worst of breed. Now, again, auto parts may be something different. We know O'Reilly. But if you just throw retail stocks altogether, they haven't been good. And this stock has not been a good auto parts supplier, at least the stock. So I just think, why be a hero and say, yeah, this is it. I'm going to be buying the dip. Remember, we talked about this last week. The dips you're looking for are the chip stocks or the technology stocks or the AI plays. Those are the dips to be buying. Buying the dip and Foot Locker did not work.
Oh, boy.
Buying the dip and Advanced Auto Parts might work, but and it is down a lot. But and I'm not going to try to be a hero and say, yeah, this is the turnaround story, because we've seen how that has worked with Foot Locker and some of these other retailers. I mean, my Kohl's, going back to that one here, Joel.
Where's that?
I mean, I sold it just saying this stock, I was wrong. It's given me an out. It was up 12% on earning, not growth in sales and the company doing great, just cost-cutting measures, desperation more than anything. And, there you are. It's right back down to the lows. So 4 days later. So retail's just a sell on rips. All these retailers.
I did see
also,
not
Amazon, it's struggling.
For Kohl's, I want to mention, of course, it seems like they're going after Kohl's also, just like they're going after Target. We don't have to get into that conversation.
We can. No, I want to have the conversation on
But
Target.
I mean, if you want to, that's,
Bring it up
to you guys. But I'll tell you right now, I've also seen mentions that they're going after Kohl's for very similar products. So just to kind of mention that, Dennis, you might have made a good move in getting out of your investment, at least for the time being. Target's still going down right now. We've seen what happened to Bud. We've seen what now it seems like happening to Kohl's. I've even seen it in certain medias starting to mention it. So what do you guys think about this situation?
I just think Target, I don't know if this is, the whole trans thing, which, we have to watch what we even say because everybody's very sensitive to this conversation. Obviously, Budweiser, we know, a lot of the fall in sales of Bud Light obviously has to do with the commercial. Target was being cautious with how they were, doing some of these display stands, I guess. I don't know. I think there's a bigger story here. I think Target is just, a retailer, and retail is having struggles here right now. Walmart is still, your defensive retailer. Target, you could see it as that, but, technicals don't lie here. The defensive nature of Target is out the window here right now. You're breaking down to 52-week low here on Target. You're getting down to 2020 pricing here. This chart just does not look good. I'd be selling Target on rallies.
It doesn't look good. If it can maybe come back to support around the 140s, maybe it can come back. But for right now, I see next levels around the 130s and 124s. We'll see if Target keeps coming down. And at the end of the day, it hasn't looked good in retail overall in this month.
No.
All right, let's go ahead.
There's so many sectors here. So I don't know if you can get the tweet. There's a bigger conversation here, Mitch. Can you get the tweet that I showed out? I tweet out, it was a chart with 12 different sectors there.
I might be able to get it.
He'll look at my Twitter feed. Mitch is really
okay.
fast. He'll grab my Twitter feed, and it was like I didn't hardly tweet yesterday, so it was one of my only tweets, so you could probably grab pretty fast. But if you can show these charts, it kind of tells the story here. I mean, for a long time, we obviously were saying it was 5 or 6 stocks leading the charge here, and that's still the case. But all the other tech stocks, a lot of them have been picking up the slack. You've seen like Micron, blasting off, obviously not today. A lot of other, stocks in the tech sector picking it up here. But this is the tail of the overall market. And, this was a great tweet. Can we say who is by here, Mitch? Because
exactly.
David Settle.
So, yeah, and a fantastic
what? CMT?
David Settle. CMTs, look at these CMTs. No. So the CMT, David Settle, tweeting this out. Thank you, David. We're just looking at the different sectors here. And if you look at the top, you see, well, he's got SPY, which we know has been doing pretty good, but that's because it's heavily weighted those 5 names. XLK, technology. XLY, consumer discretionary. We're like, well, that's not tech. We're looking under the hood.
Yes,
Let's go look at what is in XLY. And I'll tell you, the 2 top components in XLY are one, Amazon, which we're going to get the percentages for you right now. Grabbing it for you right now. Amazon is 26% and Tesla is 16%. So XLY is literally 42.3% Amazon and Tesla. So that's why that is holding up. And then XLC, well, you know who's in XLC, and it's Meta, and it's the main component in XLC. And I think Meta is 26%. Okay, so here you go. XLC's top 3 holdings, actually top 4, Meta, which is 26%, the 2 Googles, which is 26%, so 52, and then Netflix is 5 at 57. So that's why XLC, 3 stocks leading the charge there too. Then you look at the other story, and all the other sectors, financials are a disaster. XLI, which obviously a lot of cyclicals in there, not doing good, looking, like that downtrend persists. XLB, materials, not looking good at all. If we go into oil, I mean, oil is just an epic disaster here right now, which is XLE, what you're looking at it here. XLV is healthcare. That has now rolled over. XLP, consumer staples, which without, those are your Cokes and your Pepsis and your defensive nature. Sometimes that going down is okay if other things are picking up the slack. REITs are a disaster. XLRE, that's a mess. And the utilities, XLU. So again, what are you being led by? You're really being led. People will tell you it's not 5 stocks, but 5 stocks is the majority of the gains. Yeah. So there's so many other stocks. Yes, there are another 150 stocks that are going up, but there's 250 stocks in the S&P that are down on the year. More than half of it.
Doesn't make any sense.
So it is the tale of 2 markets. Don't let them tell you otherwise. And maybe in Japan's doing okay, and we got Europe. But you know what? I'm in the U.S. markets. I'm talking the U.S. markets. That's what we majority trade are the U.S. markets. The U.S. markets is the tale of two markets. You have technology and you have everything else. Tech has been an unbelievable bull market. Everything else, which really encompasses the IWM, has been in a bear market here, folks. So if you're looking at your account wondering why it's not going up, if you're not loaded up with tech, even if you're diversified and you're like 20% tech, your account's probably not doing that.
You got to be in the right tech.
You got to be in the right tech too, to a certain extent.
Because
Kathy's not doing great.
Nope. I mean,
keep waiting for her to go. It looks like it's going to go yesterday and it pulls back again. So definitely the tale of two markets.
Selective tech. I mean, and we could go right now to a couple earnings reports from the Hewlett Packard, and one of them, I don't know which unit it was, they even threw the AI buzz in there, and they didn't get a pop. Mitch, which one do you want to do first?
Let's go to HP. HP Q2 adjusted EPS here comes in at 80 cents, beats the 76-cent estimate. Sales at 12.91 billion, missed the 13.7 billion estimate. They do see Q3 adjusted EPS at 81 cents to 91 cents versus an 85-cent estimate. Full year 23 adjusted EPS at $3.30 to $3.50 on the high end versus a $3.34 estimate.
I mean, this is a disaster report here too. Again, they can talk AI all they want. Nobody is going to view HPQ as an AI play, at least not right now. So they can say, and they can be, to talk about it. But I mean, is this PC? They're talking about lowering sales. It's not a disaster. It wasn't a disaster report, but it wasn't great by any means. So, I mean, if you're looking and comparing it to other technology companies here, I mean, this HPQ is just not really an AI company. They talked, the CEO was on CNBC and he was talking up AI because they all want to drop the buzzwords AI as much as they possibly can. But the market knows this isn't really an AI play. Not direct. Not like an NVIDIA. Not like, where they're viewing Microsoft here now, even though Microsoft has a lot of other businesses that may not be just, benefit as much from AI as we think. I mean, it's just not in that category here right now. And if it's not in that category, they don't want it. So am I buying the dip on Hewlett Packard? I don't know. I'd rather almost buy the dip on a stock like Micron here today, which is down significantly too, which we can get to, rather than an HPQ.
2850 area has a little bit of interest to me. You're still not there. You got someone nibbling at 29, down $2, maybe trying to lock in some gains from some put sales. But I'm looking at this gap area, 2834 to 2854. I'd have to, if we continue down towards that area, I'd look at that as pretty good support. I don't know. It doesn't feel like it has a gas to get there. We'll see what happens in the regular session. Long ways to go to fill the gap. And you know who's stuck on this one? Who's stuck long in the 40s? And I remember, high 30s. And yeah.
Yeah, I don't know if he bought more earlier on either, but he definitely did not buy this one great. It's not a huge position for him, I don't think.
No.
It's not like Oxy where he's like buys Oxy, which we could talk about too. He's bought Oxy again. I mean, it's funny. You got this market that's rip roaring up, and the only stock that Warren Buffett really seems to buy is Oxy. I think he did a few things. What did he do on the last 13F filing there, Mitch? He bought a couple things, but not much.
A couple of things. Yeah, he didn't take a monster position or anything like that.
Yeah.
This is his biggest position right now as of late, right? He came in, added another 4.6 million shares of Oxy for another whopping, $222 million.
This one, man.
He's raising his stakes to 24.9. And this is where I've said it. I think Warren has it wrong now. I know that everyone's going to kill me. Warren doesn't lose. But I think I've been calling it. I've been seeing that oil's been going down. And if we cut into the 50s and the way that things are looking right now.
This is a big area.
Big area, man. And I think we got to continue watching this because it's not looking good all around. And even ExxonMobil, XLE, they're all looking like they're just breaking down.
They did
get the OPEC save last time when they cut production. Will they cut production again? Some people are saying that they won't do it this time. And I think that's what you need to keep an eye out for in the oil game.
Even when they say they do, they don't.
Yeah, they don't.
Again, it's the tale of two markets. And what the market is really looking like it's pricing in is a recession. This is what the overall market looks like. It looks like it's pricing a significant slowdown in the second half. And props to Mr. Lackey here on the show, because he called this 3-4
Long
months
time
ago. The
ago.
first half was going to be pretty good, and he thought the second half was going to slow down. I mean, if you're looking at the overall market, that's what it looks like. Take out AI and take out the tech stocks, and people say, we can't do that because it's part of the market. Well, there's another story being told here. Maybe we're not going to get a slowdown in those companies like Microsoft because of AI. So there's the tale of two markets. Maybe AI keeps Microsoft and Apple and those companies from, feeling the recession that looks like it's imminently coming when we look at oil and we look at those sectors that we just talked about, because all those other stocks and the IWM is just an epic disaster. The banks just cannot seem to get anything going here. I mean, we can talk as much. These were the things that the banks were the things that gave us the trouble before. And now they just aren't participating in the recent rally here at all
Not
either
at all.
again.
So
who wants to buy banks?
What's that?
Who wants to buy banks? You got to buy tech,
Exactly.
man.
They're not AI plays. I mean, this market is on AI. And if you don't have any connection to AI, or they can't see a direct connection to AI, they're selling it. I mean, Disney. Disney continues to make new 52-week lows. I sold it right before the report because I was nervous. Parks are going on, but you look at this and you think, wow, $87. When the hell was Disney $87? 2016. We're 6 years of gains. They screwed up Disney Plus, don't have enough content there. Parks are doing well, firing on all cylinders, but if you get a slowdown in the second half and the park revenue starts to go down, that's where you really won't like. And that's what I'm nervous about. And that's why I sold my Disney. The major reason was I was like, well, the parks are flying on all cylinders and the stock's not going up. What happens when the parks start to slow down? Well, I think you're starting to see it. So definitely have a potential to go into recession second half, and maybe Apple and Microsoft aren't going to go down anyways. So I like I've been saying before, maybe tech wins in both environments. Maybe tech wins in a recession, and maybe tech wins if we don't go into a recession.
I remember when you sold that Disney, and it was I think you sold it like around on the close the day before earnings.
I didn't want to take it through earnings.
And it was like 110, 111, and then that day.
Oh, that was 2 earnings reports ago. Yeah.
At 118, it hit I remember, and I think it even traded 120 like in the pre-market.
Yeah.
And you were like, oh man, I don't know about this. And then it gave it all back.
I went back in. So I bought it from like the 98-ish I bought. I didn't get the 90. Some people got the 90. That was good. And then I took it up to like the 110, 111, and it was good. It was a good move. A lot of people gave me Heeks went down to 90, and they're like, "Oh, your Disney sucks." So it came back. I've had that Disney, swing trade on 3 times. I made money on it every time. So my timing actually was excellent, even though the stock hasn't been that great. The last time it pulled back in the 90s, I bought it again, and then it was up above it, and I got nervous into the report. I just didn't want to hold it into the report. I was worried that they might talk about a slowdown with the parks revenue. We talk about this stuff. It's firing on all cylinders right now, but was it as good as it gets? Maybe it was. And if the parks revenue does slow down in the second half, you could see a case scenario where Disney could get down like 75 or even 70. I will be buying it at a certain point in time. Disney is on my shopping list, but maybe it's in that second half after recession hits that gives you this like 10-year opportunity to buy one of the best brands out there.
All right, I want to put a bow on Disney. One thing that I would say, I would actually go against that idea right now, because just look at the chat. The chat is telling me everything. I don't want Disney at all. To me, this is also like a Target and Bud story. I would stay away from Disney. But one thing that I think is more important, Dennis, more important than just Disney.
I just want to be clear. I just said the stock could go to 70. So I don't think I said anything.
I'm not
bullish.
saying
you're
that you're
going against me. I thought you were going to give the bullish scenario.
No.
I just gave the bearish scenario.
Long term, you say long term, you would like Disney down there at a discount.
I think you're going to get a better chance.
Yeah.
I think buying Disney at long term, even if you're at 87, I think 10 years from now, I think you'll make money. I think you're going to get a better shot in the second half, though. I think you could get a shot at 70 or 75 on this. So I'm not long Disney, full disclosure, because I have people tweeting at me all the time, how's your Disney doing? I am not long Disney. As traders, we change our opinions. Whoa, oh my goodness. You can't change your opinion. You're not allowed on Twitter, because if you tweeted one thing bullish 2 years ago, they're going to hold you to that 2 years later, especially your haters, because they'll go and dig up your tweet from 2 years ago. They'll ignore if you tweeted something bearish about it a year ago, but they won't ignore the 2 years ago. So what I'm trying to clearly say here today is I am not bullish Disney today. I am not long it. I am not bullish it. I think it could go lower.
And we were talking about Hewlett Packard, right? Let's we get the second HP earnings. We did one. Now let's do HPE. Did you do that one too?
We can talk about that one. I think
I just want to say I don't know about
charts.
the report. I'm just looking at this one. Street sold it off yesterday. This $14 area is an area of interest to me because there was a low before the big run up. So I'm looking at 14. I really don't care what the numbers are.
All right. Well, I think the more important thing that I wanted to state here, not towards Disney, is that what are we seeing here? Are we seeing a slight rotation from last year's winners into this year's winners, right? And I think that that's another thing that we could be seeing here is a lot of people still held energy thinking that we were going to get another run in energy. I think this could be slowly people taking those gains that they had in energy, especially also you're seeing it in the defensives, right? They were hiding in there. They were hiding in the healthcare names. They were hiding in the industrial names. And they're just slowly piecing out of that to work even further into tech. That's what I think I see happening here. What do you guys see?
Joel, go. I'm fighting.
I don't know. You guys got me like so confused. I don't know. I'm
With
never
what?
confused. No, I mean I don't know. Let's just go to the earnings reports.
We're all flustered.
I mean,
I mean,
all I was saying is that I'm not bullish Disney. I mean, what drives me nuts, and I wanted to say it again here. We want to teach something here. Is again, I'm going to say it for the second time on the show. As a trader, you are allowed to change your mind as you get more information in. As you get more information, new stuff happens. Look, you can change your thesis and sell the stock. That is what I did on Disney because everybody's saying, but you were bullish. But you were bullish. Mitch still thinks I'm bullish, even though I just gave a bearish rant. So I'm trying to tell you today, I am bearish Disney. Today. 6 months from now, it's on my shopping list. Just because something's on your shopping list doesn't mean you're bullish the stock. It means you're watching it. You're waiting for that opportunity when the thesis might change. I think we get a slowdown in the second half. I think the park's revenue slows down, and I think that hurts Disney's share price, which is why I'm holding off on buying Disney stock. And you know what? We're on the pre-market prep show. We all get a chance to talk. Mitch is going to get a chance to talk to you. I was correcting him because he was saying that I was taking the other side, he said, and he was basically implying that I was bullish. I'm trying to clearly say, because sometimes I'm not clear, maybe I wasn't clear. I am bearish Disney today. Sorry.
All right, let's move on to Ambarella. Q1 EPS at a loss of 15 cents beats the loss of 21-cent estimate. Sales of 62.14 million beat the 62.01 million estimate. Ambarella sees Q2 revenue at 60 million to 64 million on the high end versus the 67.17 million estimate. Of course, we know Ambarella used to be kind of tied with GoPro, but ever since then, they've been trying to slowly get away from that. This is one chip maker in the long run that maybe could create something with AI, but I don't see anything right now.
Horrible. I mean, big street leading the wrong way. You get up in the 80 handle, and now you're right back down $15. I don't know if not trying to long or I'm not short, but if I didn't have a position and I was looking to do something, I see support at 65. I have no opinion about the company or GoPro or anything. 65 looks like support to me, and I don't know if you'll ever get back and fill the top of the gap from the bottom of yesterday's range at 79.
It's tough stock too. I mean, you've got some technology, but when they start going down, dips are like 4, 5, 6%. When they start going down 18%, it catches too many people. It catches too many bag holders. You're catching everyone. So it's one thing.
Everyone in this one.
But now all of a sudden, everybody becomes a bag holder. So the magnitude of the drop matters. And sometimes when some things are down more, people think, I want to buy it more. But when the magnitude of the drop isn't 4 or 5%, it's not a dip anymore. It's basically a crash for that stock. And this basically just crashed on its earnings report, 19%. Remember the crash of 87 was 27. You got AAP and Ambarella that just had crashes on their own stocks. That catches everyone.
Really?
So they're harder to bounce back. when they have a magnitude of a drop that big, because there isn't just a few people that are like, oh, this is my opportunity. It's like, oh my gosh, what's wrong here? So you see a 4 or 5% dip. Sometimes those are pretty good opportunities. Like AMD was dipping 4% on the earnings, had a story ahead of it. This is just all of a sudden completely opposite. Now it is technology, so that does make it somewhat attractive to buy on a dip, but I think there's better technology stocks to buy on dips here.
I mean, street leaning super the wrong way into this report. I mean,
They were buying it ahead of it.
they're buying it hand over fist, and now I agree with you. Back down, and haven't looked at GoPro in a while, but that's just hanging out. If it's still around, down 4 cents. But yeah, Ambarella had its day in the sun, but we'll see what happens at 65. Potential support at 65.
All right, let's move forward. Let's get to American Airlines coming out with a little bit of some pre-announcement coming in here and having a little bit of a takeoff here as they see Q2 adjusted EPS at $1.45 to $1.65, up from the prior range of $1.20 to $1.40. They also see Q2 23 revenue per available seat mile to be down about 1 to 3% year over year. So it seems like they're not getting as much per available seat, but still able to push that EPS higher.
Oh, tough. Part of me, like I said, wants to buy the airlines, and part of me sees that bullish thesis. Are you still long your airlines, Mitch? You had a good buy on UAL. Are you still long?
I sold them all. I took all the profits. It just seemed to me like they just weren't getting the lift that I was looking for. I was worried about a little bit of pullback after the news that came out on American just a couple of days ago. So I had like 4-6% winners. I was like, you know what? I'll just take it.
What's your average holding period? Like everybody, you know, just curious more on. Obviously, not everybody watches your show. What is it?
Usually,
usually?
Yeah, like 2 to 3 days. Like a lot
days?
of majority of my swing trades are 2 to 3 days. Like a long one is like, let's say 1 to 2 weeks. So
Okay.
a long one would be like a week. And a lot of the times that's what? Just letting the position work, right? And just putting like a stop and then just letting the winners try to expand. But it's been hard
to give
to
it
get
room
those.
when you're like going in these trades. You've been trading pretty well. How much room do you get? I'm just picking your brain here a little bit.
It's about 1 to 2% on the losses, right? It just depends on how big the position is, but 1 to 2%. And then I'm always looking for that. Right now, the sweet spot has been around the 4 to 6%. Not getting too many 10% winners, right? Let's just be honest.
It's been tough to find those.
And if you have them, a lot of times I book them, right? So anything over that 6% has been a real sweet spot to just take the money and run. But that's the way I've been going about it lately.
This went to a great. I mean, if you're trading this today, you got a great area to keep an eye on, and $15. I mean, look at the last going back. Was it last week and the week before? 3 highs between 1501 and 1509. You just kissed it in the pre-market, getting up to 1501. So you got it. Seller been stacked there since the middle of March. You're trading up 30 cents. Looks like you're bid on this area. The only thing I would caution about is if you get this 15 bid off the open, they scoop up all the sellers. You go like the 15.10, 15.15, boom, boom. Then you come back down to that $15 level. So going to where it should. Let's see if you can catch a bid. Let's see how the other airlines are doing. Delta Airlines getting a little pop off this. This is getting into an open area. UAL, that's getting a nice pop. That's always a bigger mover. That's getting into an area. Love, which gets no love. That's trading up 32 cents. I mean, this is just, and Dennis, you talk about, different sectors and different parts. I mean, you couldn't these stocks look okay. Love doesn't look that great, but if you think the consumer's totally dead, well, it still looks like they're flying. And some of these hotels, well, Marriott doesn't, although that's Macy's, but the housing sector, there's just these little things that give you a little bit of hope. And then there's tech, and then there's the rest of the market. But
I think the consumer is not dead. I think the consumer is going to slow down, though. So again, it's about prediction. I think that's been a pretty good quarter. Disney had awesome numbers, but I think the stock action is telling you that, and maybe the stock market is right in this case, that there's a slowdown coming in the second half. So if there's a slowdown coming in the second half, I'd be cautious on airlines too. maybe they got the Disney scenario where they're kind of as good as it gets right now, and they're super uber bullish on their projections, and they're super cheap. I mean, the one thing that attracts me to the airlines is valuation. I'm a value guy, and I mean the valuations look very attractive on the airlines. But if they're in this scenario where we're at peak earnings here right now because everybody was still doing stuff, we get the slowdown in the second half, then we know what happens. That E starts dropping, that P starts going up. So I think I'm just cautious on anything that's very cyclical like that, and airlines are cyclical.
One that I still have, just to answer Dennis, that I've had now for over 2 weeks is NCLH. So I'm still betting on the cruise lines there. They don't look too bad. NCLH have it from 1361. So trying to see if that can get through the
15,
15s.
man. You got to get that thing.
Big
and
level.
It's up. Yeah,
Could go.
it's up. Yeah, it's up. Who's that? That one guy's pretty good. That one analyst is, I think it's from UBS. He's been pretty good with that one. And then, I mean, we might as well touch, CCL. I mean, look at that.
I
9
took the
to
gains on this
11,
one.
1150. RCL. I mean,
RCL's been flying, really.
Yeah,
RCL
that's why
done
it's
well.
keeping me in it too. If RCL can stay strong.
Relationships.
Yeah, you got to just keep riding the relationship, see if it can go higher. If I can see RCL get through 85, 90, oh yeah, why not NCLH start making its way to 15, 16? All right, let's keep going. Let's go to checking out some earnings after the close today. There's a lot that's going to be coming out, and I think there's some that we definitely want to keep an eye on. I think the two major ones would be CRM and CrowdStrike, but we also got Okta, AI, Nordstrom. So let's get through some of these. Let's start taking a look. Salesforce, what do you guys think?
Joel's silent here, so I'll just talk. I try not to talk. Try to get some.
No.
Somebody's jumping in here. So
what do I think about a stock before it has an earnings report? Well,
you're pulling the Musk. Joel's going to sit back, think about what he wants to say for 10 seconds. That's good. It is allowed to be done. I don't think enough before I talk, so I just jump right in.
No,
I mean, it reports here tonight. The stock has went straight up in earnings. So is it priced to perfection? Maybe, but this is one that is very loved as well. So could this be like one that goes up another 20, 30 bucks on earnings? We've seen it happen. I mean, it is a loved stock. So if they say anything good, and if they talk about AI, I don't know Salesforce can talk about AI, but there's connections there.
Yeah.
I mean, I could see this going either way. What's the expected move?
Let's take a look there.
I'll grab it.
One thing that I would say is I do see on the daily kind of a resistance we ran into from April 1st of 22. So that's a 222.15 high. And right now you can see kind of we just went towards 222.14. So seeing that acting as resistance right now on Salesforce. We'll see if it does.
$20.
$20?
Big expected move. Yeah, $20 over 10% is a big expected move. Wow. I did not think it would be that high. That's a big expected move. Hard to pay that.
Yeah, and it's going to be hard. I think one of the things that's it's going to determine also is how we maybe end the day, right? Is it another day that we're seeing tech pulling back, or do we see some buy the dip action in tech and then we're kind of pushing back towards the close? Something that I'll keep an eye out for, because if we have another weak tech day, I'd be scared about this earnings. But that's something definitely to keep an eye out for. Any comments on the technicals, Joel? You're on mute.
What the market does today doesn't have any impact on what CRM earnings are going to be or how the street is going to react to those earnings. I mean, if you were long this thing going into the print and it hit your target, take your target. If you're looking to buy the dip on this, then pick a level where it could dip to. It's had a really nice run. You think about, I'm a lot of these stocks have done well. I'm going to take this into the report. They could have good earnings, but lower guidance. It's just so much of a coin flip. So I'll just look at the action today or the action from yesterday. Let's see what people try and do ahead of the report. Keep an eye on the close. If it can stay green, maybe test yesterday's high. But it's had a nice run off that low. I mean, Benioff really timed things out at the end of 2023 or at the end of 2022. So nice move in it. We'll see how they report after the close. I mean, they got AI, but when you don't think of them, they're not like they're not chip AI. Are you right? They use AI for different.
They're going to talk it though. Benioff's a buzzword dropper.
He is a good,
too.
yeah, yep.
He's one of those two that will drop buzzwords. He's not as afraid to drop buzzwords. I mean, you have CEOs that are very promotional. I would categorize Benioff as a promotional CEO. I mean, Musk is a promotional CEO too. It's not necessarily a bad thing, but he will talk his stock. He will say CRM is the best company in the world. We're going to be at, the cornerstone of AI. He's going to say all that stuff. That's going to help because this market takes that stuff at face value. It doesn't look past that. The market, I'll argue with you a little bit. I think the market, if it starts to come off here, is a little bit, if we get an AI bubble burst and CRM reports into that, that's not a great news
Not
either.
good,
So
right.
there's definitely an impact here. We've had a couple tough days here, but again, just looking today, I mean, this is a tough day for a lot of stocks, but here you are. Microsoft catches an upgrade. Apple was trading green a few minutes ago. Amazon was green. It just is down a penny. Google, I mean, the same stocks that are leading the charge aren't even selling off much on the sell-offs. So, I mean, it's just impressive how strong those stocks really are.
Did you see that both Musk and Jamie Dimon are going to China?
No, I didn't see that.
Yeah.
They're going to see Xi?
Yeah. Well, I don't know if they're going to have tea with Xi, but
Tea with
yeah.
Xi?
Yeah. I mean, that's another thing that could, I mean, if we get nice with China, I mean, I know that's not, those sector or
What
China has
about
not been,
China? It's just a good segue. I mean, here we are breaking down again on Alibaba. I mean, here we are breaking down again, on so many of these Chinese stocks. FXI, new 52-week low yesterday. Not 52, I guess the October lows, but new 2023 low yesterday. I mean, this China trade has just been a disaster. Every time these stocks rally, just sellers galore on these things. I mean, what turns the narrative? JD.com, new 52-week or new 2023 low yesterday. I have to go back further in my chart. That's actually a new 52-week low for JD.com. That's even further than that. I've got to go to the monthlies on JD.com. That's the lowest it's been since 2020. I mean, we're $100 with $32 here now. What a bear market that China has been. Has China been in the worst? Mitch, what do you think? Has China been in, out of all the markets, you think Japan's making new 30-year highs and Europe's doing well, US tech market is doing well. China has got to be the exact opposite story. So it's not even the tale of two markets in North America here. It's a tale of two markets in the West as well. Or East versus West, I guess East they call it, but in Asia, because you got Japan and you got China in the exact opposite directions.
Yeah, if I look at it by the FXI and I can compare it to that, this is prices that you got back 16.9 years ago. So we're talking in 2006 prices that you're back down, right? I mean, think about those investors that invested in 2008, 2009 that thought they probably got a really good dip. It's right back to them, especially those kind of 08, 09 buyers in China.
Yeah.
So you could see that on the long-term FXI.
Yeah, basically a lost decade for China here. I mean, yeah, it takes a narrative to turn it around. We want clarity. I think if they gave clarity that they weren't going into Taiwan, if somehow that came out, they're like, no, we're taking that off the table. I think China stock would have a rally that was never ever seen before. But investors are worried about it. I'm worried about it. I don't have any Chinese stocks, and the main reason, one, massive underperformance, but two, the main reason is I'm still worried about the Taiwan situation.
Yeah, even if they don't intend, they're not going to come out and say that. I mean, they're not going to
say it. They intend. The problem is they intend to go in, and everybody is pricing that in, and that's why these stocks cannot go up.
Yeah, it's a big unknown for sure, and it's something definitely to keep an eye out for. SoFi Technologies, their shares are trading up today after on the heels of the tentative debt limit agreement. Of course, I did want to mention, I did see a question in the chat. The floor vote is expected to take place today at 8:30 p.m. Eastern. So look for kind of overnight headlines definitely to affect the market there. But for this SoFi situation, of course, this would reinstate student loan payments and take away student loan forbearance, right? Another thing to keep an eye out for this month, the Supreme Court is expected to decide if Biden's administration plans to forgive up to $20,000 is legal. So that should be coming out sometime this month. The news right now is all on student loan forbearance.
650 big level. This had to move yesterday. It was moving off it, and usually the big up opens in this, at least off earnings or a fade. But what I noticed is there was a lot of volume being thrown around in that one, so I wasn't as keen to to poo-poo the rally. It had the nice move. Oh, you got to be, if you're long this stock, all you got to be thinking about is 650, 654. That was the high on earnings day. That's where it peaked on March 9th, 656, and then 660. That's a 5-star level for you there, folks. Let's see if they can get it there. Pre-market trading, pre-market, you got close there. You actually got the 652. So there's a nice move. S&Ps, we're making new lows on the session here. We are 95 and a quarter. It's been pretty much a straight down market here since about 6:45 or so. So I think a little bit of trepidation here over the vote. I mean, if they really want to create some chaos in the market,
they voted down.
They vote that down.
I don't think they don't. I don't think the Dems just have it. So.
Well, they're talking about, some of the Republicans are talking about ousting McCarthy over this. So things are far from being settled. And we talked about, yesterday, like, what's it going to take for like Nvidia or some of these big stocks to go down? It could be something macro. I mean, and don't forget, you got your jobs number on Friday too. We've been talking AI and everything. We haven't even talked about inflation. We haven't talked about 10 good months of reports in a row. When is there going to be a hiccup in that?
I think there's going to be a hiccup on Friday.
Yeah, and also the comparisons are not going to be comparing from 9%. The comparisons are starting to becoming lower month over month, so that's going to make things a little bit different. So maybe we're looking for a catalyst. When's AI going to turn? When's tech going to crack? Maybe it's a macro event that's going to bring this market out. And I just wanted to make one other note. I made that call about the high for the year being in. Does it, the fact that it matched the high to the exact tick? Do you know that, Dennis? Yesterday,
we hit the high to the exact tick.
It did it on Sunday and Monday when you were out working on your shed, and you were taking. Nice. Yeah, the high in the S&Ps from yesterday. TradeStation has it messed up a little bit because there's only one trading day. 43 and a quarter, and that just happened to be your February 2nd high to the tick.
Wow.
To the exact
double top.
tick.
Joel found it in the futures.
Yeah.
Not in SPY, but it's in the futures.
Right, because the futures were open, and then everyone was looking for us to go through that, and off the open, and it failed. So, I'm not going to back off now, but it gave it a good shot yesterday. Just needed one more tick. I guess my offer of 7,000 E-minis at 43 and a quarter kind of stopped the market.
Stopping it.
Yeah, in the overnight session. But
8:48.
Right. Let's see if the TradeZero is talking about any of the same stocks we are.
Whoa. Why is Avis budget today? I need to take a look at that.
This one went under the radar.
Yeah, what's going on here?
I'm looking it up. Or something?
Yeah, looks like we got an upgrade. Deutsche Bank upgrades Avis budget to a buy and raising price target to 263. That's a reach right there, man.
What a consolidation period for this stock here. 160 forever. This takes it out. Yeah. I think there's room to 180. There's just bag holders all over it, though. It's hard. These things that are in downtrends are hard to turn around. So I think there's some room, but to what's the target, Mitch?
263, man.
They're definitely not calling for a slowdown in the second half if they're making these kind of calls on Avis budget group.
What did this guy do? Did he just grab like a dart and throw it at the chart and see where it got? Oh,
he wants to stand out.
263, man.
Now this guy he's looking. Oh, the support at 160. The institution stepping up there. It's been 160 to 170 pretty much for the entire month. I'm not going to go with your monthly high, but let's see if the Bulls can get this over 170, 186. That's $2 away. If if it gets above there, things open up between 170 and 180. But I don't know, a little bit too much, too fast for me. If you bought this thing 2 days ago in the lower 160 handle, pre-market high right in that area, 170.92. So potential resistance for car Avis budget, and this just kind of goes along with like, well, what's the consumer doing? Are they still doing things? Are they still traveling? So getting it going on the upgrade on 8,200 shares.
We'll see what happens there. Let's keep it going. Did you get your SmackDown enough last night? Because it looks like WWE is up right now. I don't know why this
That's
is up.
just
I'm
an
gonna take
odd
a look.
lot. That's an odd lot. So
Odd lot?
it's
All
not
right.
trading up, and it's flat. It's 97 to 106, so just widespread. So there's no
What
real market
100?
here.
Someone
Again, this is getting
loves
taken
this.
over. So
Yeah.
unless you have any trust issues or something there, this WWE trade is just all risk arbs now.
What about Twilio? That's been
That
getting
stock,
a little bit of a movie.
talk about a dip that was bought. Wow. And they haven't stopped buying it yet. I mean, we went from complete piss to bliss on this thing in about a week. So 55 down to 45 on the disappointing earnings report. Karen Feinerman 3-day rule worked on this one because you're buying on day 3. You are making money. 45, 50, 55, 60, $65 almost here this morning. Now you're coming into resistance. February highs multiple 65. We did get above it later February, but March, April, all resistance in here. If I was in Twilio, I would sell it right now.
Sell it right now as fast as you could. Your March high is 66.78. I think you now had another high at 66. Pre-market high right in that area at 66.05. You're $1.50 off that. So you want to get up to that area. The longer it takes to get up to that area, maybe you get a little bit of a fade. The top of yesterday's range, that's not too far away. Could definitely get that at 63.84. And since you had that dip, this has been up 1, 2, 3, 4, 5, 6, 7, 7 of 8, 8 of 9, 9 of 10 last sessions for Twilio, TWLO.
All right, let's keep it going here. I do see this tech resources up. I don't talk too much about this.
So it's getting taken, rumors of a takeover, and somebody just gave them a little bit more, trying to give them more.
Right. Not too bad there. So take out rumors maybe there on tech. Keep your eyes to see if it keeps moving. Any levels you want to give there quickly, Joel?
Joe, I mean, it came down, tempted to fill it. I mean, with these kind of rumor things, it sold. People, whoever thought this was getting taken over at 48, they were dead wrong. You've already backed $2 off the pre-market, over $2.30 off the pre-market high. Let's just do a reset and your 3-day high. Let's see what happens if it gets up to 40.31. That's actually your 4-day high for tech resources.
All right, let's keep going. Let's go to
Microsoft caught an upgrade, which is why it's up here.
It was a price target raise. That was
price target, not an upgrade.
Yep,
just price target raise.
Price target
raise.
Just
price target.
I don't know. What do you think about that one? Let's look at Microsoft. Red Power yesterday, new high of the move. I don't know.
It's overextended. I mean, we need a pullback in some of these.
I'd sell into this one. Just with that, because I'm looking at the S&Ps down 20 handles, and I don't know, maintain nice move.
Maybe this leads us out here again.
Yeah,
I mean, it hardly sold off yesterday. The strength in these names is nothing short of incredible here. So, story is still hot. Tough to fade, man.
Tough to fade indeed. Now, of course, let's check the net change down and see what I see here. Ooh. And you do see Advanced Auto Parts. Of course, we've talked already about that. O'Reilly showing up also at the top there. So it seems to me like this is an industry-wide move also. AZO kind of led the move. Now you're getting O'Reilly. You're getting AZO lower. You're getting Advanced Auto Parts lower. watch out with those types of stocks. Ambarella, we've mentioned. AVGO, we've mentioned already. Lam Research turning around a little bit on a pullback. We know that
profit taking. These are big moves here. That AVGO move was crazy yesterday, and I kind of want to show the chart of this because we talked about it, 100-point move being like such an outlier event on the pre-market show. Then it did another 100-point.
I did not see that.
It did another 100-point move. Yeah. So it opened around 820 and then quickly ran to 920. This is a lower beta name. I've never seen this happen in a stock.
You called it a lower beta name.
I almost could I can't promise anything, but I would bet that this has never had this big of a 2-day move in the stock's history. Maybe never. So that just got to silly town. Like, I don't know what they did. I don't know what happened. That it goes up another 100 points. I don't even know if it had a headline yesterday. And then it gives it all back. So it's literally now 120 points off the highs. You're talking about the stock in a technical correction. I mean, here I just made a new all-time high yesterday. Now it's all of a sudden a correction because it's 12% off the highs. And now it's down another $10 here too. I can't even understand what is going on with some of these moves here. Some of these individual
how could you buy the dip in
this? Is all algo.
This
is happening, just all algorithmic action going crazy.
You get destroyed in this even if you had 10 shares.
I think your next daily low is 740 747.02.
You'll find buyers there.
Yeah, you'll find buyers there. With the size of the move that happening yesterday, what I would focus on is that close from Friday at 812.73. So if you're looking, if you could take off the blinkers and say, I didn't sell this at 900 or 905 or 910. You just got to take a deep breath and you got to say, okay, the best mark I have on my sheets is 812.73. And I'd be a natural seller there. I think you'll find sellers if you get up to that area. Let's see if we can improve on that close. But I did not see that.
Sell your peanuts while the circus is in town. The circus was fully in town on
the whole
AVGO
weekend.
Yesterday morning. That's just silly. A stock that literally moved from 600 to 700. It took 2 months for it to move from 600 to 700. In 2 days, move from 700 to 900. You sell, and when your stock starts going upside capitulation, where it's just the candles are just ridiculous, you in those situations, normally you'll always look back and say, why didn't I sell? So, I mean, it's not always the case, but in most cases here. So I think, the selling opportunity was yesterday here. Now you've got bag holders from yesterday, but, there's still bullish people here too. Mm-hmm. I think you find support in the mid 700s.
All right, team. Like always, you guys can check out the expansive short inventory from TradeZero. Check it out, team. They are a partnership with us. I'm going to go ahead and put the disclaimer. Take a look into the market. What are we seeing, Joel?
We're drifting lower. I mean, that's it. It's just been a steady leak since got to my desk here about 6:30, and it's just been straight down, continuing to make new lows on the pre-market session. I got nothing for you. If I have to go to a Globex low, it's way back from Friday at 41.46. I don't think we're going to see that. If I go to the intraday low from last week or last Friday, it's 41.65. That's another 35 handles away. So coming back on the upside here, I don't know. Now you got to think about a battle for 4,200. We did spend a couple days in there. So that's it. I wish I could give you a better area of support. Keep an eye on your leaders. But a lot of times you get this little sympathetic, off the 8:30 or 9:30 open, you get a little pop. Let's see if you can do that. Keeping an eye on the pre-market low, wherever that happens to be. I'm going to cover some retail stocks with Tom Nikic of Wedbush, and what a Tuesday! Some good reports and bad reports. So, great show today, guys, and I'll be back with you later on.
All right, Joel's out of here. We're going to start wrapping it up here. Any last comments, Dennis?
Just expect, rotation here again. So as much as, you're seeing some stocks are weak, while consumer staples are looking a little healthier here today. In the green here this morning, I've got consumer staples. I've got some healthcare stocks starting to go to the green here. So we know those have been moving opposite. Like yesterday was the trade. We had a lot of opportunities there where some of those consumer staples open flat and then they got hurt even more. Procter & Gamble was down another $2 yesterday. So there's opportunities. Now, again, remember, opposite market. So those are moving opposite to the market right now. Those could actually show some strength here today if the market continues overall weakness here. But I just think that the overall market, if we're looking at IWM and looking at, those 9 sectors and not looking at those other 3 sectors, which are dominated by technology, I think it's telling us we got a slowdown coming. And I mean, the second thing is, what's the CPI number going to look like on Friday? They didn't seem to care. When we got the inflation data last week, do they care this Friday? If the CPI is hot, I think they'll care more. So I do think you may actually see an uptick in inflation on Friday, and that's not good for stocks either. So I think I think some of the profit taking is not a bad idea. We've, especially when AVGO went up $200. So I think we just need to look, at the overall situation where there's been a huge, ridiculous rally in tech. Maybe some profit taking there is in store. And the opposite is true here for a lot of these other stocks. Like, part of me thinks, oh, maybe some of these dips, and like the Johnson & Johnsons and stuff are buying opportunities. J&J approaching 150. Do you get another shot at 150 past the asbestos? Maybe it's a chance to get diversified again. But, diversified has not worked in 2023. If you're fully diversified, you're not doing very well. If you're fully in technology, you're doing very well. So I don't know if that market continues, but I can tell you AI is not going away.
I agree. And I think that's what we need to be looking at. If we look at what happened last year, it was a lot of concentration into the winners. And this year, it seems like it's also a concentration into the winners. So with that being said, be careful with rotation. It has been wicked. We've seen it from defensives, basic materials, healthcare. The interesting part will be if cyclicals start to actually make an up move. I feel like they've been hanging around. This is an equally weighted outlook. You see how they're just kind of hanging in there. I think they're even looking to see what happens in the tech space. Because, of course, if the market could keep driving higher, I think these high beta names will turn around and maybe make a little bit of an up move. But keep a watch, right? We'll see what happens. All right.
I think we start thinking about 50% retracements of the recent moves. Like, I mean, AMD, which I stayed long.
Yeah.
Do you think you get another shot at this at 110? I if I wasn't long it, I'd probably be buying it there. I mean, I think, on the pullbacks here, like Micron's giving you a big pullback here today. Do you get the shot down here at 67s today? 65, I don't know if you get that shot, but if it came back down there, 75 to 65 in a couple of days, be an impressive move. Maybe you're looking at those stocks on the dips. If you think the AI story continues, I mean, these are the stocks that maybe outperform during a recession, and they outperform if we don't go into a recession, if that AI story continues. So I think I'm looking for tech stocks on dips, not much else.
All right, we're going to wrap it up here. Have a good one, Dennis. You guys can keep up with Triple D Trader on Twitter, like always, and keep up with us. We got a lot more for you guys right here on Benzinga. Don't miss it. We got live trading coming up next. Keeping the moo going. Not bad. Got to say, my small account challenge for the month of May, not a bad position there, 13.84%. I'll take that for the month and look to continue pushing forward in our small account challenge. If you guys want to check that out, that's on live trading. That's coming up next. Don't go anywhere. Stick right here. And of course, we'll have all access today. We'll have start swing trade. You guys smash the like. Let's keep it going. And let's see what I can get into today.